the headline news, which is the fact that the markets are tanking today, especially the equity markets within the United States, and especially tilting towards the biggest companies. So you see it across the board, the Dow Jones, the S&P 500 are selling off, but the NASDAQ's selling off the most, over 1.5% on the day. The big companies like Nvidia are down more than 2%, in many cases 3%. Companies like Amazon are selling off big time. And this is, again, because of this trade. This is sell America. The US dollar, sell it. You have treasury prices tumble and gold spiking. And we have different analysts like this one from the Global Policy and Central Banking Strategy at Evercore ISI saying this is sell America again with a much broader global risk off. Now, why is this becoming a trade? Why are people and analysts like the ones from Evercore ISI saying that this is a sell America trade? You may have heard President Trump talking about Greenland and his ambitions with it for some time. Here's the latest from just today.
Look, we have to have it. They have to have this done. They can protect it. Denmark, they're wonderful people. And I know the leaders, they're very good people, but they don't even go there. And, you know, because the boat went there 500 years ago and then left, that doesn't give you title to property. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
That was Trump's introduction to Davos, talking about one of the most contested, polarizing things he could, which is his ambitions with Greenland. This followed escalating tensions over the territory, with Trump having launched a series of tariff threats in an effort to pressure Europe to drop its opposition to the U.S. takeover. The subject is taking center stage at this week's gathering of political and business leaders in Davos, Switzerland. Now, we know that Trump likes to make discussions about himself, or at least things that he's interested in, and he's accomplished that again. We have all these amazing business leaders going to Davos. They're going to be discussing their companies, artificial intelligence, technology, all the different things that they're doing. And Trump, of course, wants to talk about the subject he wants to talk about, which is Greenland, which is tariffs, which is the US's ambitions there. And he's made this the center stage by continuing to build up this rhetoric leading into this big meeting. So, of course, the markets are looking at this and they're deeply concerned about another tariff war, about another trade dispute, about tensions rising and partnerships being broken. Greenland has repeatedly rejected Trump's request to purchase the Arctic island, with Prime Minister Jensen Frederik Nelson saying Monday that it would not be pressured and, quote, stand firm on dialogue, on respect, and on international law. European officials have reportedly considered using the salvo of counter tariffs and other punitive economic measures against the U.S. in retaliation. European officials are coming up with ways to hit back at Trump because they know that his favorite tool is tariffs. This Sell America trade suggests that global investors will place higher risk premiums on the U.S. investments amid fears that the U.S. is no longer a reliable trading partner. Following Trump's latest threats, some investors worry that European countries could dump U.S. assets in a show of power. Ray Dalio also agrees with this, reiterating the point that right now, U.S. allies are looking to dump U.S. assets and looking for different trading partners. He's in Davos talking about this very issue and this global change.
Even allies do not want to hold each other's debt. They prefer to go to a hard currency. Right. This is logical, and it's factual, and it's repeated throughout history.
So Ray Dalio believes that allies of the United States will be less inclined to buy U.S. assets in debt and more inclined to buy gold. He continues to be very bullish on gold. With an inflamed situation between the United States and trading partners, the way that this is being framed in many cases is that this is going to cause a capital war. Different countries using different economic measures to fight between each other to try to gain leverage. And this is the message that Ray Dalio is sharing and also scaring a lot of people with today.
So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars.
Now, it feels like everything he's saying is true. All of it seems accurate here, but it is the same thing that he has been saying for some time. For example, Ray Dalio back in 2019 had a post on LinkedIn called The Paradigm Shift, which is almost the exact same thing he's been saying just today. It's only rephrased in a few different ways. But Ray Dalio has been outlining this new global order change for at least 6 or 7 years now. So what are the effects of this? Well, there's both short-term and long-term effects of this global escalation, these trade tensions that are impacting the markets today and will in the future. In my portfolio, the effects right now are that the portfolio is going down. If I look at it on the 1 day, it's down 1.1%. We have MasterCard, which is down over 1%. S&P Global's down 2%. Moody's down the same. Intuit down 1.5%. Equifax down 2.3%. So all the global monopolistic companies, these duopolies, these ones that work on credit rating, investors are pricing in that there's going to be a fleeing of U.S. assets. There's going to be less deals going forth. That's bad for the markets. That's being immediately priced in today. We have big tech holdings, ones like Google. This one's down 1% today. We have one from the Netherlands, which is one of my favorite companies, ASML, which is down 1% today with the rest of the market. We have Microsoft down 1%. We have Salesforce down just a bit. The only holdings in my portfolio that are in the green on the day are the atypical ones, which is Costco here. This one's up 0.5%. And we have Texas Roadhouse, which is up almost 1% today. Texas Roadhouse has been on a tear recently. Then we look at the Story Fund, my secondary portfolio. This one's down a bit today as well. If we look at the 1 day, it's down 1%. We have Amazon being the biggest loser, down 2.23%. Netflix is actually in the green today, going into earnings. These three are positions that I have in both portfolios. And then we have Duolingo, which is actually in the green today by 0.5%. So overall, a decent hit to the portfolio, but this isn't any huge sell-off by any means. It's nothing to panic for. When I look at the situation today and I read the news, I read the frustrations with trade, I read the threats and the tariffs and the disruptions, I read Ray Dalio once again talking about a new world order and how everything's different, like he has for the past 7 years, I come to the same belief that if the rest of the market is selling America, I'm going to be buying America. I'll be buying it every single time. Nothing has changed in my viewpoint of America being the place where alpha is going to be generated. I've said since the beginning of my channel back in 2019 that America is the place to invest. It is the best country to invest in by far. I don't even think it's roughly close to anyone. I don't think there's any close seconds if I'm being honest here. There's a lot of great companies in Europe. Europe has Spotify, they have ASML. There's great companies in Canada. There's ones like Brookfield, there's ones like Shopify, and many others. But for every great company there is in a different country, there's like 10 to 15 to choose from in the United States. 10 to 15 that are going to generate excess returns and greater earnings despite what the trade wars do. You can look at Amazon, and this is a company that's down big today because of trade fairs, because tariffs, because higher prices. But that was the same concern that we had in April of 2025. Remember the big tariff sell-off? Remember what people thought at the
Apple stock is on a 7-week losing streak, and they're asking investors how should they play it. I want you to know that you can make a lot of money when the stock market is crashing down. And one of the reasons that the stock market is crashing down is because they're saying that Donald Trump is threatening other countries with tariffs right now. For my people who have been looking into the stock market and looking to getting in, the time is now. I can't tell you what to buy, hold, or sell, but I can tell you the opportunity is plentiful. I want to just give you some information on how I'm playing Apple and how I'm playing other stocks so you can see how we can make some money. Currently, I have $305,000 in Apple. However, $120,000 of that is profit alone. What do I mean by that? Over the years, I've been putting my money to work. I've been buying Apple stock again and again and again. And now I have a total of 1,200 shares. This stuff don't happen overnight, but it can happen to you if you stay disciplined. Look at something like Apple. I see that it fell from 286. And I might ask myself, should I have sold it then? Now that Apple is 247? Or do I continue to buy more Apple stock? And the decision that I've come to from the steps in the journey that I've been on over the years, because I've been doing this for over 10 years with Apple, is I want to buy more Apple because I believe it's going to go significantly higher, even to the tune of somewhere between 313 and 330. But it doesn't have to do that overnight. I could look at the Wall Street analysts and they're telling me they could see it going to even 350. However, remember, this is the stock market. Things come down. Then they give us a chance to buy them at way better prices, even if we already bought them. And we care about these types of things because they help us to build that wealth. So many of us are working our 9 to 5s and we don't see a way out. So many of us are struggling to do what we need to do for our family, and we want to have that financial freedom and have that burden lift off of us, family. And if you are investing into something else, that means it's going up, it's coming down, but you just consistently buy it because you want more shares of it. That's the thing. We're thinking in equity in 2026. We're not just thinking in dollars. Equity, meaning how much of this do I own? So currently, I just showed you, I have over 1,000 shares of Apple, but I want more than that. I want to have significantly more shares of all of these companies so I could own more of the pie. Whenever they get into profit, whenever they get more money, they give me some of that money because I'm a big owner of it. So here's some pieces of news from Apple that a lot of people didn't hear about. And it's that they're gonna ship millions of $2,000 foldable phones, and they expect to do it this year, according to the banks. The banks see Apple charging more for cell phones and foldable phones. So you might think to yourself, I don't even want a foldable phone. I don't even need anything like that. But you gotta consider that if other people want, then it only makes sense for us to make money from it. We can't wait for other people and other companies to make all of this money without us. We've done that in the past. We're not doing that in the present, and we're not doing that in the future. So if Apple gonna be charging $2,000 for a phone, I know people like these iPhones, family. You probably looking at one right now. You probably got a MacBook. I know people gonna buy them. So I wanna be a part of it. And I had told y'all that analysts said that the price targets on this one, and this is at least 50% of Wall Street, 50% of all of them are thinking that Apple is gonna end up a year from now between $315 and $330. Some thinking it's gonna go even as far as closer to even 400. So with that being said, I'm looking to buy Apple when the time is right. And the time is almost exactly right, in my opinion. I told y'all in the past, and some of y'all might have missed this, but I said, look at the 200 exponential moving average. If you don't know what that is, that's just a trend line on the chart on a daily time frame where you can see oftentimes when great companies like Apple come to this trend line or go under it, then that's usually the time to load up. And now I'm seeing Apple getting closer and closer to that level. And I like it down there. So then that's where I'm gonna be picking it up. But I'm willing to pick it up right now. And I always tell you, people like following me on this channel and subscribing because I tell you exactly when I'm trying to buy this. I will buy Apple right now, today, in the 240s. And I will also buy it in the 230s, if not even the 220s, if I see that price.